Morgan of SunWest Mortgage is here to change the world of loan originations forever. From sending updates to your clients to allowing you more time, you can do it all in a simple chat. You no longer have to struggle with documents. All you need to do is select the files and upload them, and they're submitted in an instant along with your loan file. With SunWest, your true home is always within.
Welcome to The Interest. I'm Sarah Wolak. The Federal Reserve is meeting for the final time in 2022, and it comes at a pivotal time. Data shows the economy is cooling down, but for the mortgage industry, things remain sluggish. So is the Fed ready to take its foot off the gas? And will that be enough to jumpstart the housing market? Our own Mike Savino gives us a preview.
I think the big picture is generally positive.
We've had some good economic data in recent weeks, and experts hope this will lead to lower rate hikes from the Federal Reserve. In fact, members of the Open Market Committee have even said during the November meeting that lower hikes could be coming.
I get the impression the Fed just does not like to disappoint expectations once it has done a job of setting them.
Duke University economics professor Connell Bohlenkamp is among those who thinks that a half-point increase is coming, but he's still worried about what happens if inflation goes back up and the Fed is once again forced to approve larger rate increases.
I'm a little bit concerned in the sense that the numbers about inflation, core inflation, have come out stronger than people have anticipated. And so I'm a little bit disappointed that the Fed committed so soon to only a 50 basis point increase. But hey, it's their decision, and I realize there's lots of uncertainty.
So what does all of this mean for home sales and mortgage origination? Bohlenkamp says prices will continue to cool, but that's one of the things that Fed Chair Jerome Powell has repeatedly said needs to happen.
I think that's to be expected given the tremendous run-up in prices we've seen over the past 2 years.
Prices have been cooling the fastest in markets that exploded during the pandemic. Bohlenkamp says this trend has only recently started to make its way to the rest of the country, and only now is that bringing down rents. The cooling will eventually show up in CPI numbers.
I can't think of something on the horizon that would really disturb that and send it, especially to send it the other way.
But it's too early to celebrate the end of inflation. Energy prices could always go back up, and unforeseen issues like supply chain problems could always cause prices to rise again.
There can always be some surprises.
You can hear more from Bohlenkamp on The Principal, the Mortgage News Network's daily podcast, available wherever you get your podcasts. For the Mortgage News Network, I'm Mike Savino.
Thanks, Mike. The Fed is getting some important and timely data today with November's Consumer Price Index coming out this morning. And it's overall a good sign, with inflation cooling again. Prices grew only 0.1% from October, a sizable drop from last month's numbers. That puts inflation at 7.1 on an annual basis. For more on how we got here, we go over to mortgage meteorologist Christine Stewart. And Christine, is there anything in the report to worry about?
Well, Sarah, inflation is still way too high, but the data offers some hope that it can ease alongside a still healthy economy. You can see here that food prices are up 10.5% from last year, which is pretty much what we saw last month. Energy prices are up 13%, which is actually down 4 points from last month. But the thing that concerns experts like Bohlenkamp is that core inflation continues to stay strong. It eased up a little, but it still sits at 6%. And when we look at core inflation, housing continued to be a drag on the overall number. You can see price growth is slowing with medical and transportation costs, but housing is up again, now at 7.1%. We keep hearing that housing and rent prices have stabilized, but it takes time for that to make its way through the data. Hopefully this number starts to drop soon. If not, it can keep inflation from falling to where the Fed wants it.
Thanks, Christine. Coming up, mortgage bankers are asking the FHFA to give help to more borrowers.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. Inflation is starting to cool, but affordability remains a problem for many consumers. The Mortgage Bankers Association is asking the FHFA to push Fannie Mae and Freddie Mac to reevaluate the thresholds for Home Ready and Home Possible. Those programs are designed for underserved borrowers. The MBA's letter suggests that GSEs increase median income limits for the programs so that more borrowers can take advantage. The MBA pointed to the large homeownership and wealth gaps, especially present in the Black community, as a reason. The MBA also urged Fannie and Freddie to expand their education on these programs. In other news, the CFPB is looking to increase accountability among non-bank organizations. A new proposal would require non-banks who become subject of local, state, or federal court orders to register with the CFPB. Larger companies would be required to appoint a point person to make sure the firm is following the orders. The CFPB also wants this registry to be publicly available in hopes of increasing transparency and discouraging repeat offenders. We'll be right back with what else is interesting. Welcome back. Here's what else is interesting today. There's a lot of unique properties on Zillow, but this one may take the cake. Kellogg's listed a gingerbread house made of Pop-Tarts on Zillow as a promotion for a nationwide Pop-Tarts gingerbread decorating contest. The Zillow listing is 35 square feet, perfect to host a baker's dozen. The home is at 1 Kellogg Square and boasts a toasty interior. Here's the icing on the Pop-Tart. The contest winner will get $15,000 to boot. The contest ends on Friday. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.